Hi friends, do you want to know what an accountant do throughout the year? He is just making fluffy yummy chapatis. Am I kidding? No, I am not kidding. Just watch the video fully and you will tell how he is making the roti throughout the year. Welcome to SPSPM Knowledge Hub. Let's see the video. In the last two videos, we discussed if trial balance is given, from that how to prepare income statement, that is profit and loss account, and balance sheet. From the trial balance, you will identify all the income and expenses and put it in profit and loss account. And then whatever is left out, all the properties and all the repayables, that you will put in the balance sheet and prepare the final accounts. So income minus expense, profit, and then all the assets and liabilities go into balance sheet and our final accounts come to an end. And for this we have used these questions also, and through that we have easily prepared it. So you can see the last three videos and you can easily learn that. The link for the last three videos are given in the description box. New users, press the subscribe button and also press the bell icon and get regular updates. Also give your likes and share it to your friends. But now the question is, from where these informations are took, how we are going to arrive at this information, how we gather this information, how the accountant prepared this information, that we need to know. If we know that, then we will understand what the accountant is doing throughout the year, and that will give an idea about the accounting process we are following. That will also explain how he is making the roti. So let's see that. We need to collect all the financial data in a place. So that what we are going to do means, we are going to have a diary, and in the diary we are going to have three columns: date, particulars, and amount, and we are going to collect all money related information in this diary. Say for example, if we made any sales, we are going to record it, but all financial information alone we are going to record it. If we, after making the sales, the customer might have given some comments, he might have given some star rating. Amazon might collect star ratings and comment also, but accountant will not collect those things. He will collect only financial transaction. For what amount the product is sold, that alone he will take, and we will record it along with the date. Here our accounting year in India starts from April 1st, but in some countries it starts from January 1st, or in some countries from June 1st. So in which country, when the accounting year starts, some write-up is available, and that is given in the description box. You can see the link for the write-up. So we are recording the financial transaction in the diary, and we are collecting all the financial information in it. Likewise, you might have made sales in April 2nd. There could be two sales on the day. Then in April 3rd, likewise, we are going to enter all sales transactions in the diary. But when we see the trial balance, we are also having other transactions, other money related transactions. Purchase is there, carriage in is there, factory wages is there. So what we are going to do means, we are going to record purchase transactions also in the same diary. Whenever purchases happen, that also we are going to record it. So we have purchase on April 1st and on April 3rd. Then there is carriage inward. So that also we are going to record. Say if the carriage expense is incurred on April 3rd, we are going to record it. Likewise, all financial transactions, we are going to put it in one place, and we have recorded it. This is our journal. But when we put it like this, it is just looking like a mixed veg gurma. It is of no use. We can't get any particular information from this. We need to segregate it. So now what we are going to do means, we are going to pull out sales related information alone and put it in a separate page. The page is called as ledger, or it is also called as ledger folio. So in that ledger folio, we have three columns: date, particulars, amount, and we will record all sales related transactions in that page. So all the sales related transactions are recorded in that page. Now, when we total that page, then it will give the sales total for the year or for the period. So this is how we are going to segregate the information and put it into one place. Likewise, we will segregate information for purchases also, and we will also segregate information for carriage expense also. Likewise, for all transactions, we will have a separate ledger page, and in that we are going to put it. Now, after this, what we are going to do means, we are going to
summarize the information. There are several accounts, there are several ledger pages, and there are several totals available. Now, all the totals we are going to put it in one summary sheet, and that summary sheet is called as trial balance. So, if we prepare the trial balance, then our bookkeeping process comes to an end, because this trial balance is what is given in the beginning of the video. That is what we have already saw. From this trial balance, we prepared final accounts, that is profit and loss account, balance sheet, in the last 3 videos. So, if trial balance is given, we can easily prepare profit and loss account, how much profit we made, and whatever balance is available, we can also understand from that. So, this will complete our accounting process. So, initially, we have collected all financial information, then we have put it in a diary, then we have segregated it into separate ledger folio. Then we have balanced the ledger folio, and then we have totaled it and put it in a summary sheet. And finally, from the summary sheet, we identify income and expense and find out the profit. And finally, whatever is left out, that is our balance sheet. From this balance sheet, our accounting process for the year ends. With this balance sheet, our accounting process comes to an end. Then again, we are going to start afresh. We are going to take the balances, as well as we are going to record the new transactions. And again, we will continue our routine making process. So this is how the accountant works throughout the year and prepare the final accounts and complete the accounting work. And this is what is being given in the definitions also. Accounting is nothing but identifying, measuring, recording, classifying, summarizing, interpreting, and communicating. So now you could easily tell what is accounting. And all the definition talks about the same thing: recording, classifying, and summarizing in a significant manner. And it is identifying, measuring, and communicating, and permitting informed judgments. But here we need to note down that we are supposed to do it in a significant way. There are some procedures and methods available. So for each process, for entering in diary, that is for entering in journal, for entering in ledger, for entering in profit and loss account balance sheet, there are some rules and regulations available that we are going to see in the next video. So this is what we are going to see in the future video. In the future video, we are going to understand the process in detail. Now we have saw the bird's eye view of accounting. Subscribe to our channel, like and share. Thank you.